short exercise 9-2. We're going to record credit card sales and debit card sales. So restaurants and other companies do a large volume of business by credit and debit cards. Suppose Summer Sand and Castle's Resort Restaurant had the following transactions on January 28th. So we have credit card transactions and we have debit card transactions. $10,800 in credit card sales and $10,000 in debit card sales. So in this problem, we're going to do it two different ways. In the first scenario, we're going to record these transactions net of the credit card processor fee, which is 2% in each scenario. In the second scenario, we're going to do record the same transactions, assuming that the company instead was using the gross method, which would mean that you just record the sales and then the fees would come out at the end of the month. So requirement 1, suppose Summer Sand and Castle's Resorts processor charges a 2% fee. So what this means is if the company is going to accept credit cards, they have to pay a fee to the credit card processor. And in this case, it's a 2% fee, 2% of the sales. And then in this scenario, they're going to deposit the sales net of the fee. In other words, we're going to take out the fee right away. We're not going to wait till the end of the month to take out the fee. So journalize these sales transactions for the restaurant, record debits first, as always, and then credits, and then have an explanation. So journalize the credit sales net to the fee first. So the credit sales means these credit card sales. So $10,800. So when the company makes the sales, they're going to get cash. So cash is obviously going to go up, and cash is an asset, and assets go up with a debit. Also, remember, we are going to record it net of the fee. So we have to record the fee, the 2% fee, and that's going to be an expense. So our expense is going to be increasing, and expenses increase with the debit. So we're going to have cash be a debit, and then some type of an expense be a debit. So cash is a debit, and then it looks like they're going to call it credit card expenses. And then the third transaction, the third account is just sales revenue. Sales revenue is going up, and revenue goes up with a credit, so that's why I'm putting it last, because credits go last. All right. So what I recommend you do is you just start off with the sales. That's going to be a gross amount of $10,800. And then we're going to calculate the credit card expense. So the credit card processor charges the company a 2% fee. So we have to figure out what 2% of $10,800 is. So 10,800 times 0.02 gives us $216. So that's the credit card expense. And then the cash, I should say the restaurant is going to receive cash that's equivalent to 10,800 minus the 216. So we need to do 10,800 minus 216, 10,584. And then double check that your debits, these two, equal your credits, and they do. So we're here, or what we're doing here is we're recording the credit sales net of the fee. Net of the fee means we're taking the fee out right away. We're not waiting till the end of the month. Now journalize the debit card sales. So same thing, but this time it's $10,000. So we're going to have the same accounts. We got cash going up, we have the credit card expense going up, and we have our sales revenue going up. Sales revenue is $10,000, and the credit card expense is going to be 2% of that, so that's $200. And then the cash the restaurant's going to receive is $10,000 minus the 200 gives us $9,800. Again, we're recording the debit card sales net of the fee. All right. So that's how we would record credit and debit card sales if our credit card processor takes out, let me scroll back up, takes out the fee, this 2% fee, right away. Some credit card processors don't take it out right away. They take it out at the end of the month. So in this next scenario, we're doing the same transactions, but we're using the gross method. All that means is that we're going to record the sales without the fee at first, and then at the end of the month, that's when the fee would come out of our checking account, also known as our cash account. All right, journalize the credit sales. So again, we're doing the 10,800. So we have cash. And because we're using the gross method, we're not going to calculate or remove the credit card expense yet. We do that at the end of the month. So both of these are just simply going to be $10,800. And we're recording the credit card sales. Or the next transaction, we're doing the debit card transactions. So that's just going to be a gross amount of $10,000. So cash goes up, sales revenue goes up. Oops, I forgot my explanation. My explanation is to record the debit card sales, gross of the fee, not net of the fee. Now, the authors kind of screwed up on this problem. That would not be the last transaction. This problem is acting like, well, that's it. We don't have any credit card fees, but that's wrong. So let me show you what would happen at the end of the month. At the end of the month, and this is just done in Excel, at the end of the month, we would need to record a credit card expense. And the credit card expense is 2% of the gross sales. So we have sales of $10,800 plus sales of $10,000. So we add those together. It's $20,800 times 2% gives us $416. And then the credit card processor would remove that amount from our checking account. So when the accountant gets the credit card processor statement at the end of the month, they would see $416 or have been removed from the checking account, and then this is how they would record it. So the numbers, the eventual numbers, are the same as with this method up here, but it's just a matter of when is the credit card expense recorded, during the transaction, or in this case, at the end of the month. And that's it.